Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 4th of May. Starting off with Atome Energy, or Atome Energy. Here we've got what looks like a mid-move consolidation, which would obviously be quite a result, given that we've already come up so far. We had a golden cross with the 50 and 200-day moving averages just today, basically. Resistance there today and earlier at the end of the last month, around £1.60, so we need an end-of-day close through 160 to unleash a potential new leg to the upside. That could be towards 220, 240 as a best case scenario, but obviously we might need a bit more consolidation, support coming in there at the broken resistance line there from back in February around £1.20. So a bit of a sort of a pinball effect between 120, 160 maybe over the near term, ahead of a potential 220 to 240 target there for Atome. Onto a stock which has delivered the goods on the upside. We were looking for, initially we were looking for 0.37 and we got that, but then we're looking for 0.57 and we've got that too at the moment. And if we can get an end of day or a weekly close above that, we could be looking at a target here as high as 0.8. Obviously that is an optimistic one, but you can see that the top of that broadening triangle from basically 2 years ago heading up towards 0.8. And maybe we see that by the end of next month as a best case scenario. Most likely scenario, I suppose, is that we've double topped or triple topped with the old 2-year resistance around 0.64, and it will take a while for the shares to get up to any fresh highs. The other point to note is that we're still in the run up to a golden cross between the 50 and 200-day moving averages, and so that suggests that it may not be over in terms of the recent sharp bull run for Clontarf, but probably staying in the game in terms of the upside while we're above around 0.48, which was the old 1-year resistance, hopefully becoming new support. On to Capex, which is back after a bit of an absence. Here we've got bounce off a what is a falling support line there from July last year. Slightly obscure. The other point to note is that it's a bear trap rebound, double bear trap rebound from March and from this month, from below the old October support. That was at 5 pence, and above 5 pence we're looking and hoping for as high as 7.5 pence as a best case scenario target. Probably want to see an end of day close above the 200-day moving average around 5.65 before assuming that we'll get the big upside there up to 7.5. Moving on to Jersey Oil and Gas, which has been quite a mover in the recent past. One of our favourite setups here, the unfilled gap to the upside and then the break of that gap day, which was at £1.98. Current situation is we're going into a bull flag above the old resistance at £2.20. Got resistance at £2.60 from the previous high, but it looks as though that's mid-channel resistance rather than the top of the line, and if we can get a decent end-of-day close through 260, we could be up to 320 over the following 4 to 6 weeks as a best-case scenario. But that set up there, the unfilled gap to the upside, a very strong one, and that means that JOG could deliver on the upside over the near term. On to a stock which I looked at before, but wanted to give it a day or two just to see how much it would go up, I suppose, but also to get sure of the price action and the price pattern. We broke the 0.66 resistance from the early part of this year, and now we've broken the next level up at 0.76. End of day close, a weekly close above that, and the 200-day moving average would suggest that we could even have a best case scenario target here up to 1.2 pence, which is the top of a June 2021 broadening triangle. So everything dependent really here on holding above and keeping above the 0.75 pence area over the near term. Moving along to the next contender, which is for those who like binary bets. I think it's fair to say even its fans would suggest that this is a binary bet in McColls, but the interesting development here, apart from that horrible bull trap through the 50-day moving average that we had in the middle of last month, or towards the end of last month, and the failed gap fill up to 6.9 pence, has been the gap down back through the 50-day moving average. What's interesting now is that we've got a potential bear trap from below the old March low, which was 1.23 pence, so an end-of-day close above that, or a weekly close above that, could be significant in terms of any dead cat bounce we get. The other positive to note, if you're in that kind of frame of mind, is that we've got bullish divergence now. So we had a lower low for the end of April, beginning of May, but the RSI actually higher. So that bullish divergence could be an excuse for some brave bottom fishers to target the 50-day moving average at 2.83. But clearly that's not for widows and orphans, and it actually could make some traders widows and orphans as well. Moving along to Nostra, which is in the good camp in terms of recent charting. Here we've hit that resistance line, which seemed a bit ambitious, up to 0.81, the top of that basically rising trend channel from August last year. So we've done that. And I suppose if you're a fan of the shares, you might be looking for, or I'm trying to anticipate what the next target is here. Obviously, in the near term, we've done a lot, and so there may be some consolidation, but end of day close or a weekly close above the 0.8 pence zone, and we could be looking as high as 1.1 pence for Nostra, which should obviously be quite a spectacular rehabilitation, given the rather soggy price action that we had before the start of the year. But you can see that starting gun on the rally was that gap to the upside that we had in January, and we haven't really looked back since. Positives here as well, the way that support has come in above the 50-day moving average ever since the beginning of February. So that does suggest there could be some more to come for Nostra, but I'm sure people are quite happy with what's happened so far. On to N4 Pharma, which looks like it's just trying to break neckline resistance. That is neckline resistance around 3.62 pence from back in February. The overall pattern here since January, a sort of double-headed inverted head and shoulders pattern. And what's also positive now is the way the 50-day moving average is rising. Always positive when you have the 50-day line rising near the lows, does suggest a trend change. Sustained price action above 3.6, the 3.6 area could deliver a move up to the top of that rising trend channel from January as high as 6 pence by the end of next month. Stop loss at the moment, I suppose the tightest would be just around or just below the 3 pence level, and we're backed by bullish divergence going into the March turnaround for the shares. On to Open Orphan, which emphasised that it won't be delisting, and also unveiled new contract news as well. Multiple support points here at 14 pence, so hopefully that dip that we had below 14 pence at the beginning of March is rendered a one-off bear trap. But the more price action we can get above 14, the greater the chance of a move up towards the 200-day moving average around 19 pence over the next month or so. Oilex raised money today, which probably people were hoping it wouldn't, but we've gapped up today off that support line, which is relatively a healthy development there. Above that support line there from December 0.18, we could see at least a partial retracement of the pullback that we've had from the April peak at 0.31. Very choppy stock, and again, not one for widows and orphans, but I suppose the overall message here is that any dip below 0.2 has tended to be a buying opportunity for the shares. And the longer we stay above that now, with the fundraise out the way, the better the prospects for a move maybe back into the mid-20s or upper 20s over the next few weeks. Reabold Resources, more positive chart here. Here we've got a rising trend channel from September last year. We bounced above the floor of the channel and above the 200-day moving average, above the floor of the channel at 0.3, looking for as high as 0.65 over the next couple of months for Reabold, backed by the strongly rising 50-day moving average. And it'd be nice to see the shares close above the April peak at 0.41, maybe by the end of this week. Just 3 contenders to go now in this rather bumper marathon session. First is Sunrise Resources, where we've broken out of this falling wedge with a gap, which is tends to be a very good sign. Also bear trap gap reversal, so we bear trap below the initial March support for the shares. We've got bullish divergence as well, so the lower lows for April and May and higher RSI lows should and could give this some lasting momentum to the upside. Obviously, we've got that resistance in the low 20s, which is the obvious target here, and we've got the 200-day line up to 0.2. So it would be disappointing if we didn't get up to 0.2 over the next few weeks, especially while we hold above the floor of that gap at 0.11. A couple of stocks to go now. Another bear trap reversal situation, this time in the form of tertiary minerals, if it'll appear on my screen. Here we've got that bear trap from below the December support. That was at 0.16. We just narrowly had 3 dips below it to 0.15. Bullish divergence as well, so that gives us the confidence that we can not only hit that resistance line there from June at 0.22 over the next few days, but maybe over the next 4 to 6 weeks hit that November resistance line projection just shy of 0.3 pence. Maybe that's a target for the end of June, but backed by bullish divergence, tertiary looks rather better than it has done for quite some time. On to Vast, which was yesterday's dish of the day. I think the high at 1.77, just shy of the 1.8 that I tweeted out as a potential initial target. Current situation is that above that line at 1.75 pence, let's call it, we're looking for a best case scenario target here as high as 3 pence, which is just shy of the 200-day moving average. But given how far the shares have flown, it may be interesting to see whether the stock will actually be able to get up to that 3 pence level. If it does, it would be very impressive indeed, and I suppose quite surprising. Final thing to note is the bullish divergence here. So we had much lower lows from, as compared to December, 1.5, much lower lows, but the RSI actually much higher than it was back in October. And that provided the momentum for this move, and it could still provide the momentum for a move to 3 pence. That's it from me today. More updates tomorrow.